So Ben, the big question is, why don't all properties make for a great investment?
Bryce, it's as simple as supply and demand. Some properties have high supply, low demand. Other properties have low supply, high demand.
Yep. So the latter is what we call investment grade.
It is.
And the former is what we call investment stock. So let's put a bit of meat on the bones here, Ben.
Yes, let's do that.
Investment stock is largely has appeal to investors, right? So think high-rise apartments, think house and land packages where side by side all the same, think student accommodation, Ben, think service apartments. They really do have an appeal to the investor.
They do.
But they don't necessarily have the appeal to the owner-occupier, which is driven by
emotion. So what we're talking about here is owner-occupier appeal. This concept of I'm proud about my home. I can see myself living here. And remember, that's 70% of the market buyers, Bryce. How many buy investment stock?
30%.
30%.
Exactly.
So these people buying with their hearts can push the price a little higher. So the smart investor, what do?
Well, Ben, they buy investment grade property. But here's the deal, and this is something that we really want you to get. That it's actually ironic, Ben, that investors don't chase the properties that are purely for investors. As investors, here's the secret. You actually want to chase the properties that appeal to the owner-occupier market, not the investor market. And once you get your head around that, it opens up a world of success and better results with the properties that you buy versus getting seduced by this, Ben, thinking, if that's investment grade, if that's investment stock, wouldn't that make sense as an investor that I buy that? The answer is no. You want to avoid that. So it's student accom.
Yep. Service departments. Medium and high density apartments. Those types of things is what we're talking about here. They really are limited in their broader appeal, okay, or they can be easily oversupplied. And Bryce is also talking about another one here where they may have some interest in them, but the banks don't. And so that limits, again, the demand. So we talked about that low demand, high supply, or specialised in terms of what you do. So if I sell a student accommodation apartment to somebody else, another investor has to buy that.
Yep.
You don't get to live in these things. Serviced apartments, same type of thing. So you've got to be very careful in terms of your asset selection on this side, where Bryce, in terms of investment grade, what are we talking about?
Well, investment grade, a couple of things. You want to have that owner-occupier appeal, as you talked about. And I might even put the word occupier in there as well.
That's all right. I got it. Owner appeal. That's easy.
But we also want to have that scarcity, because what that means is someone who is going, auction's the best way to sort of explain this, Ben. If you're standing at the front of a property and you've got 2 or 3 or even 4 bidders, and sometimes the price, based on what you've seen around the area, suggests I should be buying at this level. Because 2 or 3 or 4 people have got their heart invested in it, they keep on bidding, Ben, they keep on bidding, and they might actually go $20,000, $30,000, $40,000 above what would reasonably be expected to pay, because their heart's invested in it. The school's around the corner, sister lives around the corner, they want to go into to work easily on the train, there's a beautiful cafe, there's wonderful parks, all those sorts of things that make me fully invested in that property means that it has that owner-occupier appeal.
And that's why we talk about location. When you see a cluster of these types of properties together, you know that the location itself also has strong appeal, because in our view, 80% of your return is going to come from the location, the land that underpins that, and then you're going to get the 20% on the quality of the property. Now, that doesn't mean you just buy in any location though. You could buy in a great location and get a serviced apartment, boom, boom. Or you could buy in a great location and get an oversupplied high density. Boom, boom.
So what only does 80%, isn't it, Ben?
It is. So the combination of the two is your winning combination to get an outperform result. And that's what we're about. Our passion, our purpose, Bryce, is to pass on these lessons so people don't make the mistake. There's hundreds of thousands of dollars going in to these types of investments, and they're going to get poorer returns than these types of investments over here.
So when you buy an investment property, folks, focus on the heart, not the calculator, which gives you the idea of which property you need to be in. Now, Ben made a very, very good point here, folks. We've talked about property, and it's a mistake that a lot of investors do. They go, I'm going to talk about the property first and the location second. We tell you that you've got to spin that around. You've got to do the location first, as Ben said, and then focus on the property after that. So
measure the demand and supply in that location. That'll start you off. and then make sure you get the right asset selection. So what we're talking about here is don't buy those.
Buy those, of course. Now, what we want to do is let you know that this is some of this content that we want to cover in our upcoming webinar, Ben. How to build a property portfolio in a market downturn and retire on $2,000 per week without having to renovate, redevelop, or sacrifice your weekends, Ben. So that is happening
Wednesday at 7:30 p.m. on the 13th of March. So if you want to learn more details, just click on the link below and you'll be able to register. Bryce, we do have a cap. Last one we did, we had an oversubscribed, so people did miss out. So it's really important that if you are interested in learning more about property investing in a changing market, downturning, mixed market, whatever you want to call it, it's always important that you register straight away.
Exactly, as Ben said. Now we're going to cover off 3 secrets, Ben. The first one, we're going to show you how to retire on $2,000 per week with 5 properties or less. That's the first secret. The second one, we're going to show you how to grow a multi-million-dollar property portfolio without sacrificing the family budget. And the third secret, we're going to talk about whoever buys the right property, Ben, does not have to worry about negative market noise. So we're going to cover all of that and more on Wednesday, the 13th of March at 7:30 p.m. We'd love to see you there, folks. Register on the link below.